Welcome to this video. I've had a couple of messages, comments about my rules and valid POIs. So I'm going to cover that in this video. I have my fan on in the background because it's hot in Thailand, but I hope it's not too noisy and you can hear everything. So I'm just going to go to this example because it's pretty recent with EU, and you know it's clean. The markets are never cut and clean. However, if you understand this example, you could implement it to other ones. And I'll go to another example with like last week because EU, it wasn't the cleanest, you know, and yeah, I'll get into the video and we'll see what happens with it. So we've got like the low here, the lowest point that put in this high. So we have our swing structure. But I'm just going to go through my rules. And I want you to forget about time frames as well. I only trade London, 8 till 10, Thailand that's like 3 till 5 in the afternoon. But eliminate the time zones. What I need for a valid 4-hour POI that I like to see is a sweep of a low, so a sweep of liquidity, and a break of structure. And we got a nice sweep of liquidity here that leaves liquidity to take on entry, and we get a break of major structure. So this is a nice strong 4-hour POI here that would be nice to trade from. And we have this liquidity to take. And liquidity to take is good because a lot of people will be trading from here. And they won't wait for a 15-minute market shift to show its hand, and they'll probably trade a 5 seconds or a 1 minute market shift in here and be taken out and wonder why. So there is no the reason you wouldn't want to use this POI. You could have it marked up and see the reaction, of course, but look at this imbalance and nothing. There's nothing to liquidity to take, so this is going to get run because there's nothing here to use for liquidity. Reasons, you know, this holds because we have liquidity to take here. After you take liquidity, you're going to get a reaction normally in the opposite direction. Hopefully I'm not going off on a tangent here, but so I'll try and keep it simple. Liquidity sweep, break of structure. This is a valid 4-hour POI. Obviously you could use your discount, blah, 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 but I'm just going to talk about try to get a valid POI. Sweep of liquidity, break of structure, and we have nice liquidity resting just, you know, within the POI or just above is nice. And I'll wait for a 15-minute realignment to see what's going to happen. In this scenario, you'd want to wait and let price play its hand. So we've got a 4-hour POI, and we're going to go to the 15-minute. So your POI, your alerts went off, your POI has been hit. For me to be involved in this trade, I would need to see this high go. It's going to show bullish intentions. So this needs to go. So just set alert here. And okay, we've had a 15-minute market shift. This means we've had a 4-hour demand, and now we've had a 15-minute alignment with the demand. So the 4-hour demand has been respected, and 15-minute has become bullish. Okay, I'm going to look for longs. I'm not going to short and be on the wrong side of the market. So in this scenario, you wanted to look for the same stuff. This here would be a valid POI for me because this sweeps liquidity, is causes a break of structure. This is the high that put in the low, and now it's been taken. So we are now going to be trading from the new low that put in the high, looking to catch the higher low to put in another higher high. So you could say in this theory now, like this is valid. This is a valid POI. However, we do come into mitigate here with this wick. It comes in, sweeps the liquidity. So this is the last valid POI. It can be used as liquidity, but we can't, you know, I'm going to use a candle that sweeps liquidity, the last one. And then if you get a 1-minute market shift confirmation in here, you're going to trade it. That's valid. That's showing you that from here we're maybe going to be bullish, putting in the new higher high. And if price comes in, gives you a 1 minute market shift, takes you out, that is also a valid loss and can happen even though you're following your rules. Just don't be upset, just observe price if you're not too emotional, because maybe we're coming in to the extreme and using this as liquidity. But this is very valid, this one. Why this one also? This supply interaction. This supply with highs put in the low, we have come in, gave a reaction, supplies tried to get involved, and buyers have come in, taken the suppliers out, and this is where the money has been injected in price. So this is where I want to enter from. If buyers are in the market, they're probably not going to want to take themselves out. If true buyers are in. You know, the cliche of BFIs and hedge funds, yada. So that is like the theory behind it. And sometimes I skim through my trade recaps, I don't mean it. Sometimes I don't mark up my liquidity sweeps and stuff because my eyes, you know, I could see it. Over time you just start to see it. So you can set your alert there, and we're just waiting for price to do its thing. Also, you do want, on a 15-minute POI, you want liquidity to take on entry. You do. Do I sometimes trade when it's not there? Of course. I'll go to a lot of time frames and I'll look to see what the reaction's like. If it's very clear in the 1 minute, okay, I'm going to take it. I'm going to put my risk on the table to take it. You know, I've got my 4 hour, and then got 15 minute, then I've got my 1 minute. Okay, I've not got liquidity to take, it's more risky. Let's see what happens. However, this would be a much better scenario if this come down like this, and we were hovering above price, and then we have got these lows to sweep before we continue up. That would be a much better scenario. But everything else here is aligned, so I'm just going to go down to the 1 minute and see what happens there. So we're in the POI, and we look for the same stuff. I think this one didn't pull back from last. What's the low on this? 470. 470. Yeah, so we need this to go to be involved. So then you just have your alert set here, and this is a 1 minute market shift. Exact same on every time frame. So if this goes, this is showing intentions that we may be coming up to put in the new higher high. Okay, we've breached this. Same on the 15 minute. Price has come down, we've pulled back. This high is put in this low. So what should price have done? Respected here and put in a new low. But that's not what happened. This high that put in the low has now been broken. So now what's happening to the order flow? It's becoming bullish. So then this low should not go, and we should come in, get respected, and then continue higher. Same scenario. What do we want? The POI that sweeps liquidity. This candle here gets swept. And someone said in the comment they look for the sell to buy. Look for the sell to buys that get engulfed on the 15 minute. You don't always get them, but they're more probability, more higher probability. Like this one here, what a great example. Oh, that's why it gets respected. Bearish candles, sideways action, and we get a nice engulfing candle. What happens after the engulfing candle? Buyers are in the market. Demand's been getting respected. So these are great signs. 15 minute, need to sweep liquidity, need to cause a break of structure, and I also, on my rules, have, we need to be from the new low to the high, so on a bullish, from the higher low to the higher high, I need to trade from discount. If this price action was still up here, I wouldn't trade. And I do use these on the 4 hour and the daily, but just on the 15 minutes, you've got your rules. My 3 solid rules are a sweep of liquidity, a cause of break of structure, and the discount tool. And I do like to see liquidity to take on entry. Do I enter if it's not there? Yes, I do. But If you do have that, it's a good confluence. The 1 minute, I want to trade from what's swept liquidity. And also our supply and demand interactions. This is a supply, this is the whole supply range. You can refine it down for whatever you like. We come in, supplies try to come in, again buyers have overpowered supply. But of course you need to pull back to come and mitigate and continue with order flow. And these are liquidity to take because people will trade from these, and that's what we want. And we are going to wait for the edge to be hit. And you know, you can cover this low, but it would be better to cover here. This low. But you can just cover this one. This is just the best you're going to get, is just trading demo on the market, then trading live, having your rules, and just continue to go through it. You'll see for yourself. This takes out all this liquidity. And look, this is why you would want to cover this one. Of course, you'd stay in the trade here. You could take the 50%. I market execute, so another scenario that you could look to do that you don't get here after this liquidity has been swept. You can then start to buy because we've swept the lows, then we may continue. Or if you see this here, for sure buy, market execute. I don't set like orders, I market execute. So once price comes in, you know, market execute, or however you like to do it. So we should put in a new high. You could hold it to here. This should be our new break of structure. Because what comes before a break of structure? A market shift. And you get it. And that's how I like to trade, try and follow order flow. And this is now the high. Where's the lowest point? For this example, this is the lowest point. The lowest point to put in the high you want to use. Okay, this. So what usually happens after a break of structure? You can anticipate a pullback. And to try and play both sides of the market, because you never know exactly where price is going to go. Say, you know, this is the leg. And let's look at price. We have come into premium of the leg, of the 4-hour leg. We've swept to all these highs and we have given an internal market shift. So this could indicate that you could take a short and play it to take all this liquidity. If you're getting a 15-minute market shift in premium, it's a good indication you want to be shorting. If you get a 15-minute market shift in discount, that's a good indication you want to be taking longs. Obviously using your 4-hour and daily for higher time frame direction. 15-minute intraday trades to try and see where price is going. If you didn't look at the 15-minute, you might have not known it was going to be bullish if you're just on the 4-hour. That's how I trade. And sometimes you look at the market, you know it's clear. Sometimes you look at the market and you don't know what's going on. It's not clear. That's why, you know, try and follow the rules as much as possible. And let's go to recent price action, because it's not so clear. And it's annoying when you get examples that are not clear. Look, we've put in a new high. I like to see a sweep of liquidity. We get it here. And this is a nice, of course, engulfing, but you don't want it too clean. There's a no liquidity to take on entry. And we don't break with this push. I like to see the range, liquidity sweep, and then leaving liquidity behind. Then we push and the major structure gets broken, and then we have our liquidity sweep here. And what do we have on entry? Liquidity to take. So price is going to likely, people will trade from here. Price is going to come in, sweep these guys out, pretend to go, people are going to buy, and then they're all going to get taken out, the early buyers, and then price goes. We see it in price action a lot. And this is all because we come from the edge and we've had liquidity to take. You know, this is going to keep you a bad trade because there's no liquidity to take on entry. It's not the origin of the move. And this wasn't clear to me. In this scenario, I don't like to trade unless it gives me a nice clean break, and it didn't here. It's ranging, look at this, all sideways. However, when prices like this, you look at the 4 hour and like, okay, nothing's too clean for me. And we've done this. You have an internal market shift. What normally happens, you respect supply and you start to get breaks of structure. Not all the time, but a lot of the time. And then look at this massive liquidity sweep of the highs. You usually dump after that. But then this is where we would use the medium time frames. Okay, we're in a 15-hour zone. What's happened? This low, this high that put in the low is broken. Got a break, a market shift here. Then we got a break of structure. Okay, this is looking bullish now. What swept liquidity and caused a break of structure? This candle here. Taking out these lows. Caused a break of structure here. Low, high, low, high. What's likely to happen? A new low to put in a new high. Obviously, not looking at the time frames because these happen in New York. I trade London, but it's sometimes happens. Last week, I got like 3 trades. They were all in London, nothing in New York. So you don't know when your trades are going to come. So I've took that liquidity sweep away. Sorry this video's a bit longer, but it's better to have examples and not just like something so clean, because this isn't clean. The 4 hour POI in the direction. So we've got this here. And people would use this. People would use this as a market shift also. What I like to see is the high that made the low go. The high that puts in the low go. Because then we're going to trade from here. Why? Because this is going to take this high if the order flows to continue. This is like an internal break, you know, this is like a sub. See what happens to price when we come here. Look, I just said in the previous, this one, look, the liquidity to take on entry, it's great. People are going to buy from here and we're just waiting for this. What do we get? For this candle here engulf from this one. What happens here? This candle here engulfs this one. Showing in bullish intentions. The high goes. Where is price now? Continued with the bullish momentum. And I'll show you another thing. Look, we've taken the highs. I had, hopefully this is still black, yeah. I had this marked up. And what was I wanting to trade? Well, we're making higher highs and higher lows, so I'm wanting to buy. I got no trades last week. So I had this marked up. I want to trade from a valid 15-minute POI. We don't get one. And this was out my hours. This is New York. But I had all this marked up, and price comes in into discount of the leg. Why is it good? Because you're not going to buy from here. And this is just going to be a disaster. You're buying a premium. Is that going to go to 1 out of 10 times? Maybe. but majority of the time, you know, we're going to go from discount. So having these rules, a sweep of liquidity like this, a break of structure, using the discount tool from in a bullish, higher high and higher lows, and the bearish market would be your low low and low highs. And it's subjective, you know, it's how you read the market and how you see price action. Just have rules there, and I took a sell when someone took a buy one time, and we both hit TP, you know, sometimes happens. But this is the way I like to trade. I find it the most easiest, following these rules. And yeah, so I was right with everything here, you know, this high, this low, the break of structure here, had my discount tool, but we never come in and touched anything that I could trade from. So, you know, I'll wait for the next week. I believe this was the Friday, yeah. It was New York. So there was no valid opportunity for me here. You can, let's say, not something I do, but like, there you got your market shift. It's pretty clean, to be fair. All this liquidity to take on entry. I'd want to trade from this. Why trade from this one? Look, it sweeps the liquidity and then we get the bullish price action. This would be your market shift. This POI, all this liquidity to take. Why you're not going to trade from here? It's in discount, but what it doesn't have, look, this is why this is all good to have the rules. It has no liquidity to take. Why we come into here? It wants to take everyone out before it continues. Come into the extreme of the leg. Look at this nice engulfing candle where you could buy from. But yeah, hopefully that comes across nice or clean, but that's kind of how I like to follow price, using the daily, the 4 hour, the 15 minute. I sometimes look at the 1 minute because it's the 1 hour because it's clean, but you can clearly see, look, this is bullish, you know. And then just plotting, if you come to the charts and your session is like this, let me because this is before it comes down to here. You come here, how does that look for you? For me, I could see that we're making higher highs and higher lows, so I will mark it up. What happens after a break of structure? Anticipate a pullback. Price just doesn't tap a POI and fly. You know, it sometimes happens with news events, but it, you know, expands and then we pull back, expands and we pull back, expands and pull backs. Sometimes it's going to go, not majority of the time, it needs to move, fill orders, mitigate orders. So you come here, what do? You don't look for anything up here, it's too high on the leg. Sometimes it's going to go from here. But in this scenario, when you come to the charts, if you follow your rules and you have an alert set here, you know you can't trade from anything up here. It's the other way around, but you know, we have to trade in here. This, it doesn't sweep liquidity. You can trade from here because this is where it can be subjective. I like to trade from sweeps of liquidity like this. However, this is the edge. Price cannot go below here if it is to continue. If we start to break, this, we need to start looking at lower highs to put in new lower lows, because the order flows change from bullish to bearish on the medium time frames. So if price isn't going to break here, okay, if we take the edge, it doesn't sweep liquidity, but it's a demand chain. Hope that makes sense. But it's going to keep you out of any of these POIs. But yeah, I'll leave it there. But it's going to be quite long. But hopefully you took something from that, and catch you in another video. I might just do some educational ones rather than trade recaps now. There's a lot of trade recaps there, and hopefully I can help in another way.